$119,000, and we're up $919 on the day. That was a brief view of my Charles Schwab account where I invest in the stock market. What's going on, guys? It's Ryan Maya back with another video. On this channel, my goal is to help you make more money. Today, I want to go over some things that I've learned investing in the stock market in the past 4 years, some of the tips and tricks that I've learned, and some of the big mistakes that I've made, so hopefully you don't make the same mistakes. What I want to cover with you in this video is basically how to invest in the stock market as a beginner. If you already invest in the stock market, that's okay. These tips and tricks will help you. I've also made a bunch of mistakes. I'm an ordinary person, and I want you to learn from my mistakes so you don't do the same exact thing. By far, the biggest breakthrough that I had, which is actually so simple, is invest in companies that you know and use every single day. Do you have an iPhone? If that's a yes, invest in Apple. You know Apple, you know they're a huge company, you use their products every single day, they're probably a good company to invest in. Do you like coffee from Starbucks? If you like Starbucks, you go to Starbucks 3 days a week, you know they're a good company, go ahead and think of the possibility of investing in their stock. A big breakthrough that I had was I have an online business that I actually use Shopify's platform. And I started using Shopify more and more often, and I saw that they're a publicly traded company. I said, hey, I use Shopify. They have great customer service. They have a great product. I like this company a lot. I'm gonna go invest in their stock. And what do you know? I'm up about 30% since I've invested in Shopify and really understood, hey, they're a great company. I use their products every single day. Why not invest in the company that I use? All of these are great signs of great companies and great stocks to pick. If you, your friends, and your family use these products every single day, that's a very, very good sign that that's a good company and it's a good stock to pick. The next tip is something that I will never, ever do again, ever. And what that is do not listen to your friends, your family, your uncle, your cousin on what stock to buy. Now, let me explain. I started investing in the stock market when I was about 19 years old. And just like you watching this video, I did not know what I was doing, or I didn't know enough about what I was doing. I was just watching CNBC, I was seeing numbers go up and down, left and right, and I really didn't know what to do. So like what anyone else would do, I went to my friends and family that were already investing in the stock market and said, hey, what should I buy? And I can't tell you how many times people told me, hey, buy this stock, it's 90 cents, I guarantee it'll be $10 by the end of the year, it's going to the moon. Everybody says that. The only reason you should invest in a stock that your friend or your family member recommends to you is that you do the research, you know the company, and you feel comfortable investing and putting your dollars behind it because you made the decisions to. My cousin Johan Lorenzo actually has a YouTube channel where he talks about investing in the stock market. And recently on one of his videos, he recommended a stock, Clorox. Now look, I don't take stock recommendations from anyone anymore, but Johan presented some really good information. He said, hey, the stock has taken a hit over the past couple months. Here's why you should buy it. I know Clorox is a great company. I did my own research and I felt very confident investing in the stock because it was a dividend stock. It had just taken a beating and they've been around for a really long time and they're a great company. So I went ahead and bought the stock on Johan's recommendation, but I was comfortable with it. And lo and behold, 2 weeks later, I'm up 6%. Not because Johan told me to buy it, because I believed in it myself and I did the research myself and was comfortable picking this stock. The next tip kind of transitions onto exactly what I was just talking about, is you have to feel good about the stocks that you're buying. Now, what I mean by that, if you buy a company, let's just say Apple. If the market takes an absolute shit tomorrow, it drops 30% and Apple gets absolutely hammered. That's a question that you should ask yourself when buying a stock for the first time. You should even go as far as, hey, if this stock goes down 20 or 30%, would I be comfortable buying more shares of it? Now, Apple is a big portion of my holdings, and if Apple fell 30% today, no doubt in my mind am I buying a lot more Apple shares, because if you look at Apple's chart over the past 20 years, every time Apple takes a dip, it recovers and goes right back up and makes new higher highs. And why is that? Apple is a great company. They're the biggest company in the entire world. And I think they're gonna continue to dominate the technology space for a long time to come. So Apple is a long time holder for me. And again, why is it a long time holder for me? It's because I feel good about the company and I feel good about owning that stock. Now, moving on to my next point, something that I've learned to do over the past 3-4 years is don't buy too much of a stock at once. Now, what I mean by that, let's say you have $10,000 to work with, right? You have $10,000, you're good with investing in the stock market. Let's say you want to buy AT&T. Do not take your full $10,000 and go buy AT&T. It doesn't make sense to put all your money in one stock. What you should do instead is go buy $500 worth, go buy $1,000 worth, and dip your toe in first to see what the market's gonna do. If the stock goes down a few percentage points over the next couple of months, you can go ahead and buy a little bit more, add another $500 to your position. See, the flip side, if you went ahead and invested your full $10,000, now if the stock goes down, you have no more money to add in and lower your cost basis and own shares at a lower price point. So this is why you should always dip your toe in, buy a little bit at a time until you're completely comfortable and you're completely satisfied with what you're doing. Now, my next 2 points kind of go hand in hand together. When buying stocks, you should always think long-term, be logical and realistic, and when the market takes a downturn, do not panic sell. Here's a real life example that came back and bit me in the ass. In 2019, I owned about 20 shares of Amazon at about $1,600. Now, just before the year was over, the stock took a dip and I panicked. It was almost all of my money that I had in just one stock. Again, another big mistake. And I was down about $3,000 and I couldn't take it anymore. I sold. I sold Amazon when it was about $1,400. So if you do the math, I had 20 shares. I sold them at $1,400. I had $28,000 that I got out of the stock market. I lost $3,000. I was okay with it. It sucked, but whatever. Now, if I was thinking long-term, if I was thinking realistic and logically, I should have held on to Amazon and not panicked. Now, if you fast forward just a couple years later, Amazon stock is now $3,562. My same 20 shares that I sold for $1,400 and cashed out $28,000 for a loss would be worth $71,200 if I would have just been patient and thought realistically and long term. So instead of losing $3,000, I would have made $50,000 in just 2 years if I wouldn't have panic sold. Back then, I really didn't know what I was doing. I thought Amazon was going to zero. I thought the market was crashing. I needed to get all my money out, and that's what I did. I sold. But if I really would have just taken a step back and said, hey, Amazon is a $1 trillion company. They're not going anywhere. Just wait for the stock to recover. I would have made a lot of money. Now, on to my next point. What you should be doing is looking for dividend-paying stocks. Typically, dividend-paying stocks are more mature stocks. They've been around for a long time, and they're typically stable companies where you're not going to see huge swings from day to day. Dividend stocks are typically more risk averse, like AT&T. I own AT&T. It hasn't really moved up or down too much over the past 2 years that I own it, but it does pay out a 6% dividend for owning it. So I have about $20,000 in AT&T. I don't have a lot of upside. I don't have a lot of downside, but I get a consistent dividend every single quarter. I'm actually down about 2% on the share price, but if you look at all the dividends and add up all the dividends that I've gotten over the past couple of years, I'm actually in the positive because of that 6% yield that it pays. So again, look for dividend companies, look for companies with a strong dividend. Typically, these companies are more stable and reliable over time, and they're great first picks in the stock market. And the last tip I'm gonna give you is, if you're buying stocks for the first time, please do not take a lot of risk and try to be Jordan Belfort and become the penny stock guru. Just invest in the companies you know. Do not take a lot of risk at first until you feel a lot more comfortable with what you're doing. Now that I've invested in the market for 4 to 5 years, I feel a lot more comfortable with what I'm doing to be able to say, hey, I'm gonna take a couple $1,000 and take a risk here, or I'm gonna take a couple $1,000 and take a risk on this stock. But other than that, my portfolio is majority made up of companies that I know and love and use, right? Apple, AT&T, Walmart, McDonald's, Verizon, American Express, big companies that I use day to day that I know, hey, these stocks don't have too much risk. They're gonna do great over time. And that's it. Those are my basic tips and mistakes that I've made to help me grow my portfolio. As you can see, I have more cash sitting on the sidelines. I'm gonna be buying more stocks. So if you guys got some value from this video, go ahead, give it a like, and click the subscribe button. I post 1 to 3 times a week talking about money, stocks, real estate, finance, e-commerce. My goal is to help you make more money. So if you like this video, again, go ahead, click the like button, subscribe, and I will see you on the next one. Peace.